if we could read the tea leaves, okay, not me because I'm clueless about this stuff, but the experts on the economy, right? They're reading what seems to be, I guess maybe that the worst may be over, that this is the, quote, soft landing so many of them predicted, and hopefully we don't have to worry about a recession. The economy seems to be on solid footing coming out of the pandemic. At least it's what they're reading between the lines after the Federal Reserve yesterday left interest rates unchanged again, even signaling they may begin to cut rates next year. More importantly, what does all this mean for me and you? Let's bring in an expert. Doug Flynn is co-founder and partner at Flynn Zito Capital Management, an expert on the economy, finance, among other things. You can follow them on X at Flynn Zito. Doug, a pleasure to have you on. Appreciate the time.
Thank you, Manny. Great to be here.
So before we get to what it means for the average American, what was your takeaway from the Federal Reserve meeting, what they had to say yesterday? Because markets sure seem to love it.
Yes, they definitely did. The market the Dow at least hit an all-time high yesterday. So that's great news. And I think it has to do with the fact that the market has been predicting this, and then the Fed actually came through with what the market was thinking was going to happen. That doesn't always line up,
sure,
but when it does, that signals, hey, good things, we got it right, the market can move forward, because we think that rates are done as far as peaking and raising is concerned, and now we can look to perhaps having them being lowered, and that's exactly what they talked about yesterday.
Just for fun, I decided to check my 401k yesterday. It's up 19.4% for the year. I don't know how that compares to the average, but it's certainly better than the last time I checked a few months ago.
Yes, the market's up about, well, the S&P is up about 22, 23%, a little bit more today. But so that's right in line, because maybe you're not 100% stocks. And as many people, as they get older and accumulate more money, they maybe don't want to be 100% stocks. They want to also mix in some bonds to take away some of that volatility, because as we all know, the market doesn't always go up. Yeah. And when it goes down, it's good to have those other investments. So I think that's an excellent rate of return given what's going on, and a good time to review where you are whenever you hit all-time highs. It's a good time to take a look and say, do I want to be as aggressive as I've been now that the market is hitting those highs once again?
How will the fact that we're heading into a presidential election year with all of the uncertainty and everything that is going on, and impeachment inquiry now, another, candidate, a potential, nominee facing indictments and everything else, how do you think all of that will affect the markets in 24?
I think the politics are always a backdrop, and one of the things I've learned in doing this over quite a few years is that if you let your politics lead your investment strategy, you're going to not have a great result in the short run. And so you've got to look sort of through who the president is. Because, for example, I always think about Apple. Does Apple care who the president is in how many iPhones they're going to sell next year? When you think about the market, you're thinking about companies. How do they execute? Do they sell a lot of stuff to a lot of people? Are they selling more next year? Are they growing? Are they well run? Are they good citizens? Those, good companies that are well run, that have profits, they're going to, over the long run, make money, and the stock price will go up. They're sort of hand in hand. And so there can be noise, there can be policy shifts. Energy companies can come in and out of favor based on who the president is.
Sure.
But you don't want to lead with that. It's a backdrop. There's noise that will maybe hold things back from it being, gangbusters forward. But I don't think it changes your long-term outlook, because most people should be invested in stocks for the long haul.
We're speaking with Doug Flynn. He's co-founder and partner at Flynn Zito Capital Management. Okay, so the markets are doing well. All of the economic indicators are positive. Really, none of that has anything to do with how Main Street is feeling. The vast majority of Americans still feeling significant impacts from inflation and high prices. What is all of this positive economic news? When does it trickle down to us?
Great question. It's almost like gas prices to me. When they go up quickly, and when they go down, they kind of go down slowly. That seems to be the way it goes. And so it's probably similar in this. Now, on the one hand, mortgage rates, as an example, they hit 8% just a couple of months ago. They're down around now to about 7%. So you're already seeing some of the benefits for those that maybe got priced out when the mortgage rates were a little higher. And that means that rates will likely be even lower next year. So that's going to eventually work its way in. Credit card rates as well will tend to come down. Loan rates will come down along with interest rates. But it really doesn't change the fact that next year's outlook isn't as rosy as this year's economic outlook. It's kind of weak. The companies might have pulled ahead a lot of their sales, and their earnings don't look, everybody's coming out with sort of weaker outlook for next year. Delinquency rates and on credit cards and loans will probably continue to go up before you see them go back down.
Right.
So most people are not going to feel an immediate relief. There'll be some of that, and they really have to hang in there probably past next year to really see the benefits the way that I see it as far as the loans and those types of things are concerned.
Doug Flynn, co-founder, partner at Flynn Zito Capital Management. He's obviously an expert on the economy and finance, among other things. You could follow them on X at Flynn Zito. Doug, really appreciate it for your time. Be well, but we'll reach out again soon.
Thank you, Manny. Take care.